Is rental real estate passive income? In this video, we're going to talk about that. There's two things I like and don't like about this, and I'm going to explain all of that. You want passive income. You want this. You want to make sure it sticks that way. It's the way the IRS does it. There's a lot of information out there. I want to clear up the fog on this. By the time I'm done, you're going to want to be addicted to passive income. I'm going to promise you that. Matter of fact, I'll do this. Stick around to the very end, and I'll show you how to take passive income and avoid any kind of IRS situations out there. This is how I have been doing it for the last 20 plus years, okay? Because somebody shared it with me about 10 years into my career, and it changed everything dynamically. In fact, I'll do this. I've got a little bonus for you. Stick around to the very end, and I got a little surprise for you. So do that. Again, like, subscribe is probably the biggest thing that you can help this channel. It's all you got to do is hit subscribe and like. Don't have to comment or anything else. If you got any questions, hit it down below and we'll help you out with those. All right, so is rental real estate considered passive income? And the short answer is yes. So let's just look at what the IRS considers passive income. So anything that you're not actively working at to create the income is considered passive. So if I've got rental income, you're like, the heck, I'm not just sitting around, man. I got to work with these people. I got to do all these things. You're like, no, wait a second. Okay, let's be realistic here. It's not like you got to go 9 to 5 to a job. You might have to make a couple of phone calls. And I say this all the time. When we're out looking at properties in some beautiful city here in this beautiful United States, and I'm having a sandwich, a burger, and a beer at this great place in whatever city I'm in, I'm thinking, this is my job. You know, I got to go look at properties. I got to make them look nice, put a renter in there. They're happy, I'm happy. And then the rent checks start coming in. I don't really have to spend a lot of time on that property once I get it to that point. So that's considered passive income. If I'm in a limited partnership, you know, I've got a program where we're doing a bunch of building on some properties. We got some partners in there. They're not doing anything. It's considered passive income to them. So those are some of the things that you're looking at. What is it? Well, passive income. I got income coming in. I can depreciate the property, any expenses I have to bring that down a little bit. But that's how the IRS is going to treat this until you start getting a bunch of these. Once you start doing this as a full-time business, there's a lot of things that I'm very careful on. For instance, if I'm getting a bunch of properties in my retirement account, they could go, it looks like you're running a business out of your retirement account. No, I'm just trying to blow up my retirement account. Yeah, it looks like a business. No, it's not. So you might have a little pushback there. You know, there's not really any set rule on how many properties. If this is all you're doing and it's going to be considered a business. And so you might be in a different tax bracket. Again, I'm not going to get into that. You really need to talk to your tax advisor about that. One of the things I want you to do is I want you to be in a tax problem. I want you to have a tax problem. Are we clear? Tax problem? You want a tax problem? Okay, so what I mean by that is I love it when my CPA calls up and goes, dude, you're on fire. We have a tax problem. That means I'm making money. So it's always interesting when somebody says, you know, I want to avoid the tax problem. No, you don't. You just want to plan. Okay, so literally everything, I just sold a bunch of property. I'm going, dude, how badly am I going to get hit on taxes on these? And I actually wasn't too bad because I owned these properties for a while. I'm like, okay, so I can move that money over here and do this. And I'm not going to get into the politics of, do I like the IRS or how the system works? It is what it is. If you don't understand the rules, you're going to get eaten alive. Okay, so if you don't understand, you can take a property and put it into a private retirement account and avoid all these questions altogether. Well, that's kind of your problem. If you don't know that you can put properties in, you can't just shove them in there. They got to be bought with retirement money. And then how many do I have to get before it starts becoming run as a business? Well, that's, again, a conversation between you and your CPA. I'm going to tell you the easiest way to get the properties into a profitable situation where you and your family are making a ton of money. And that is through the retirement account. But not just that, you have to start buying tax liens and tax deeds. I'm telling you, it's the best kept secret on investing in the United States today. So let me explain how I've built my wealth. Let's just take tax deeds. We're going to leave it at that for this video. A tax deed is a property owner that has failed to pay their property taxes for a minimum of 4 years. After 4 years, the counties, not the federal government, not the state government, the counties go, we need this money. Schools, roads, police department, ambulances. We have to have this money. Everybody else is paying the taxes. If there wasn't a penalty system in the place, no one would pay their property taxes. And you can go to countries that don't have a strong tax law, tax property law, and you'll see exactly what I'm talking about. The schools are a disaster. The roads are not fixed correctly. Our infrastructure is mostly because of property taxes. So the county sits there and goes, enough's enough. We're going to have to sell this property. I will step into that after doing my research, and I've got other videos on that. We'll get to that later on. Do my research. Say, I want this property, and I'm willing to pay $50,000 for it. Opening bid's $10,000. I bid it up. Let's say I get it for $40,000. This property is probably worth $250,000. Okay, but I just got it for $50,000. Maybe I have to put a little lipstick and makeup on it to make it look good. Okay, so I put another $50,000. I'm still in it less than half of the value of the property. There's no way. This sounds too good to be true. Okay, keep doing what you're doing. How's that working out for you? I'm telling you, we've been doing this for 30 years. Okay, it's an unbelievable system to make it happen. So when I go, and now understand, when I go to the tax sale, any liens and encumbrances on that property are extinguished the minute I put my hand up and they say sold. A tax deed takes a superior position over all liens and encumbrances, including an IRS or a mortgage. Okay, now I'm going to put a little asterisk on that. As long as they've been notified. And that goes with any kind of a foreclosure. People have the tendency to think that tax deeds foreclosures are some kind of secret Vulcan squeeze. It's not. It's like any other foreclosure. The difference is the property taxes immediately take the first position. So when they foreclose, instead of keeping those other liens and encumbrances, it wipes those extinguished and out. Well, why would a bank let you do that? Well, they might not. That's to notify everybody that's got a financial interest in this property to make sure they're getting notified properly. That's part of the process. And look, your head's going, oh my gosh, all I want to know is rental income passive or not? And we're already getting down to this. Yes, it is passive income, but you want to make sure you maximize that passive income the best way possible. And the best way possible is to get the property cheaper. And this is the best human way possible on planet Earth. You will never find a more successful investment strategy than this. Now, listen, I said if you hang out, I got a little gift for you. I've got a brand new course on how to buy these properties through tax liens and tax deeds. It's my gift to you. Okay, nope, free. Click the link down below. It's in the description down here somewhere, higginsmethod.com. Click that. It'll drop you into the website, and I'll give you the course. Oh, on top of that, I got a little bonus report that I'll send out to you. America's Best Kept Investment Secret. My gift to you. I want to see you make this happen. Abundance. There's plenty for everybody out here. All right. This is Saen Higgins saying God bless and good luck and happy hunting.